Hello and welcome everyone. In this video, we are going to take a look at BDAY, which is the latest Daymax ETF launched by Hamilton. The Daymax ETF series in general has been an amazing one. If you have watched my previous videos, you already know that CDAY is my favorite ETF. It is the largest position in my TFSA account and also a substantial one in the margin account. What I really like about these ETFs is that 80% of the holding within these ETFs is purely growth, and the income is generated only using 20% of the overall holdings. With the income range being generally between 15 to 17%, these ETFs provide a perfect balance between growth and income. Hence, I'm quite excited to present my views on the Bitcoin-based Daymax ETF. In this video, we will briefly go over the strategy of the BDAY ETF and in addition do a comparison of this ETF with other Bitcoin-based covered call ETFs in the Canadian market. This comparison will be based across the following factors. Portfolio allocation. Basically, what percentage of the portfolio is allocated for options writing and what percentage is available for growth. The next factor would be Bitcoin exposure, whether the fund holds Bitcoin directly or through a third-party ETF. Next, we will take a look at the amount of leverage used. This will tell us how much leverage is being used to generate income. Last but not the least, we will compare the income generation strategy, the exact strategy used by the fund to generate income. It will not be possible to do a comparison of total returns because BDAY is a very new ETF, but I will probably revisit this fund in about 6 months' time to see how it has performed compared to the other Bitcoin-based covered call ETFs. Here is the list of ETFs we will be comparing. In addition to BDAY, we have two ETFs from GlobalX. One uses leverage and the other does not. And we have an ETF from Harvest and one from Purpose. With all that highlighted, let us first take a look at the overall strategy of the BDAY fund. BDAY is structured very similarly to the other Daymax ETFs. There is a primary holding which has 100% allocation, and then there is a secondary holding which has the additional 25% leverage allocation. And the option writing is done on the leverage portion. But if we look carefully, we will find that it has more in common with CDAY than it has with SDAY or QDAY. In my review of the CDAY ETF, I had highlighted how it has 0% overlap between its primary and secondary holdings. This is what it looks like when represented in a Venn diagram. CDAY's primary holding is CMVP and only holds Canadian companies, while its secondary holding, VOO, only holds US companies. In other words, neither of the ETFs hold the same companies. The same is not true for SDAY and QDAY. With SDAY, VOO holds all the companies within SMVP. In other words, there is 100% overlap within the holdings of the ETFs held in SDAY. This is how it looks when presented in the form of a Venn diagram. And the same is also true for QDAY. All the companies held in QMVP are present in QQQM. This is how it looks when presented in the form of a Venn diagram. Now, if we look at BDAY, it holds IBIT and QQQM. IBIT is an ETF which holds Bitcoin. QQQM is an ETF which tracks the Nasdaq 100 index. Similar to CDAY, neither holding of BDAY has anything in common. Bitcoin is a digital asset while Nasdaq 100 is an index of top 100 companies listed on the Nasdaq stock exchange. Some might argue that certain companies within Nasdaq 100 have exposure to Bitcoin, like Strategy, which means there will be some correlation in their performance. This is certainly true. However, it is a minuscule amount which could be ignored. The returns of the vast majority of companies on Nasdaq 100 index are not dependent on holding Bitcoin. Another advantage that all Daymax ETFs have is that the secondary holding gets exposure to the overnight return. Since the 0 days to expiry options are written and expire during the regular market trading hours, the secondary holding is able to receive the full return of its underlying stock's performance during the after and pre-market trading hours. Research shows that the vast majority of the returns of stocks happen during these hours. In other words, the Daymax ETFs are designed to maximize capital return not only in terms of portfolio allocation, but also in terms of trading duration. Like the earlier Daymax ETFs, BDAY is set to receive this benefit. But now let us take a look at how BDAY compares with other Bitcoin based ETFs listed on the Canadian market. Here we have the comparison of the 5 ETFs. The factors we are comparing them across are the amount of portfolio allocation for covered call writing, the type of Bitcoin exposure they have, whether direct or indirect, the amount of leverage used, and the covered call strategy used for income generation. Let us take a look at the first column. I think this is the most interesting part of this comparison. The two ETFs from GlobalX, along with HBIX and BTCY, allocate anywhere between 10 to 50% of the portfolio for covered call writing. But when it comes to BDAY, I have made a distinction between its two holdings because I think this is very important to understand the structural difference of this ETF versus other Bitcoin based ETFs. In BDAY, 0% of the Bitcoin holding is allocated for covered call writing. In essence, the covered call income is not dependent on Bitcoin volatility. This is very important. BDAY's income, thanks to this structure, is generated using Nasdaq 100's volatility, while all the other ETFs on this list are using Bitcoin's volatility to generate income. This also ensures that we receive 100% capital return of Bitcoin held in BDAY. This is not possible with other ETFs since some portion of their Bitcoin holding is allocated to covered call writing. What about Bitcoin exposure? BTCY is the only ETF which has direct exposure to Bitcoin because Purpose actually owns the BTCC ETF used for covered call writing within BTCY. All the other ETFs use the popular IBIT ETF from iShares as their way of getting exposure to Bitcoin. To be honest, this is not a bad thing because IBIT is a very popular and liquid ETF compared to BTCC, and it also has a lower management fee. Once again, the structure of BDAY ETF shines through because the liquidity of Bitcoin ETF is irrelevant since the covered call writing is actually done on QQQM. Whereas for other ETFs, where the covered call writing is actually done on the Bitcoin ETF, the liquidity becomes very important. In that sense, I would say that BCCC, BCCL, HBIX have an advantage over BTCY since IBIT offers higher liquidity and lower fees. When it comes to the amount of leverage used, BDAY, BCCL, and HBIX use 25% leverage, whereas BCCC and BTCY are not using any leverage. At the end of the day, leverage is a double edged sword. During a bearish market, it will lose more value than the underlying holding. However, during a bullish market, it will also give a higher return. So, this is more a question of how comfortable someone is with leverage rather than whether it is a good or bad thing in general. Last but not the least, when it comes to income generation strategy, BDAY, as we all know, uses a 0 days to expiry option writing strategy. All other ETFs, on the other hand, write a regular covered call, generally written on a monthly basis. The moneyness, whether it is in the money or out of the money, is not fixed and is based on management's discretion. I have already highlighted one major advantage that 0 days to expiry option writing brings to BDAY ETF, which is the fact that it is able to capture the returns of pre-market and after-hours trading, something that a regular covered call cannot do. There is, however, one hidden risk to 0 days to expiry options. If there is a sudden intraday bullish move in the underlying holding on which the option is written, then this could result in substantial losses. In this case, the underlying holding is the Nasdaq 100 index, and a massive upswing intraday is not very common, but it can happen, and when it does, it could lead to substantial downside. The good thing is that this only represents about 20% of the portfolio for BDAY, similar to the other Daymax ETFs. So the vast majority of the fund remains unaffected, which is a good thing. So, in conclusion, I would like to say that BDAY is definitely the best Bitcoin ETF in the market right now. Even though this is a very new ETF, just based on the structure alone, it is not very difficult to make that conclusion. Here is a representation of how BDAY is designed to maximize capital growth while providing high income. 80% of the fund is just pure growth and is completely allocated to Bitcoin, while the remaining 20% of the fund is used for covered call writing. And even within that, we are capturing growth for the pre-market and after-hours periods, while generating an annual yield of approximately 17%. Other funds are generating higher income, but the amount of portfolio used for covered call writing is also high, which means that we are only receiving the potential capital gains for roughly half the portfolio. HBIX is better than other ETFs on the list in the sense that they are writing covered call on up to 33% of the portfolio. So about 67% of the portfolio is available to capture capital gains. But this is still less than what we are getting with BDAY. Another point I wish to reiterate is the fact that BDAY is not dependent on Bitcoin's volatility for generating their income. I think this could be huge in the future because as Bitcoin's adoption becomes more widespread, its volatility is going to go down. In fact, this has already happened. Bitcoin's current volatility is less than where it was 5 years ago. So, 5 years from now, it would not be difficult to imagine that it goes down even further. Whereas the Nasdaq 100 index is constantly rebalanced, so its volatility is expected to remain more or less similar. Since all the other funds are dependent on Bitcoin's volatility for generating their income, it is very much possible that their income would go down in future if Bitcoin's volatility goes down. BDAY, on the other hand, will remain unaffected by this. That brings us to the end of this video. Let me know your thoughts about this ETF and if you're planning to buy it. Thanks for watching. If you found some value in this video, don't forget to like, share, and subscribe. I will see you all in the next one.